As you guys might have noticed, the crypto space just keeps getting crazier. I mean, every single time I take a look at X or YouTube or the comment section, it just never ceases to amaze me how wild and unhinged this space is. I should add that it's actually not only crypto, but I'd say the entire financial system, TradFi, and just the stock market are also a handful. I mean, let's first of all take a look at what's going on right now. We've got ourselves the inflation rate numbers coming out in the US within a couple of days. Right now it's Tuesday, so for me about 2 more days till we're going to be seeing those numbers. And actually the day before we've got the FOMC minutes, depending of course on where you are in the world. And if you're wondering, FOMC minutes is always just nice to get a kind of a glimpse of what the Federal Reserve is thinking with regards to policy, and mostly with regards to the interest rate. And then kind of afterwards we get those inflation numbers which put the pin on the map. But of course inflation is a pretty lagging indicator, and so it's more so about what they project for the future that's the key, rather than just the number that comes out. And as I said before, the most important ones to watch are the yearly changes. And it's interesting that the core inflation is expected to go down from 4.3 to 4.1, and inflation rate itself was actually expected to go up as far as I believe just a week or two ago, but now also is expected to go actually stay similar from 3.7 to 3.7. At the same time, you know, this whole policy is so crucial, is so important, because, for example, the US, with their death spiral, $500 billion added to US debt in 21 days. Actually, right now, I think it's turning into about $1 trillion every single month, as Senator warns of a death spiral that could bury the future generations. Yeah. That's like simply put. Anyway, before I move on, if you've not pressed that like button yet, I've stated before, my journey on this channel is to make 1 million millionaires, and we're gonna kind of have to record success stories from all the people. It's something I'm looking into as to how to do, and I'm thinking of all the best ways to give you guys knowledge that so many others don't have. But right now we're only just a couple of thousand people that watch every video, so you guys are my first priority. But make sure you also help the channel out back by pressing that like button, and let's continue on with the story. The new kings of Wall Street aren't banks. Private funds fuel corporate America. Another very important concept for you guys to understand is how money works. Essentially, if you're trying to become extremely wealthy, the most important thing to understand is to make your money work for you. I've described before the different phases of wealth, where right now the majority of people watching, again, it's going to be very specific to your situation, everybody's different, but is in that accumulation phase where you're trying to get money to be able to live your life the way you want it. It's a different thing than having money and just making sure your money doesn't go down, but hopefully goes up. If you, for example, got a net worth of $10 million, you don't necessarily need more money to do nearly anything. I mean, yeah, to buy your big yachts, to buy your big planes, but generally speaking, you can buy anything that you want. And so what you're mostly looking for, and I'd say this is actually mostly above 20 million. That's also where a lot of the private banking for the normal banks that you and I know start. But basically, that's a different phase of wealth. You're more so trying to preserve it rather than accumulate. For the most part, not everybody, but you understand the idea. And it's interesting to me how many people don't understand that those with money, not a bank because they hold other people's money, those with money control nearly everything. I mean, a literal example could actually be to understand that all the senators that you always see insider trading, and I'm saying that in a funny manner because it is pretty ironic that it's possible, but it will always be possible because it's almost impossible to completely nail it down. They're going to use these offshore companies or offshore companies of employees or offshore companies of employees as relatives and so forth and so on. They will always be able to find a way, I think, right? But theoretically speaking, if they could go to for $50,000, $200,000 a year to $200 million in net worth, there's something wrong with your system. And by definition, they control the country. Our thesis makes sense. I meant mostly so in the sense of the private credit and the private funds sector is so incredibly huge. What do we call BlackRock, for example? This one is mostly just to showcase that with interest rates at multi-year highs, hedge fund and private equity are taking over lending. And I just wanted to quickly bring it to y'all's attention that this area is so significantly bigger than many people realize. And ever growing. I mean, this landscape cannot really stop, whereas with banks, yeah, following the numbers, they're not really doing too well quite recently. Another point of that is that people are putting less and less money into the banking system and more money with these private funds because, well, why would you ever actually go for a bank, right? Anyway, that brings up another question. Is crypto the answer to everything? to every one of our problems, inflation soaring like crazy, is Bitcoin or is crypto as a concept it? And I think there's multiple ways to go about it. But one of the main reasons we are buying crypto every single day is in case everything else fails. I've had to fill in some questionnaires recently for KYC, for exchanges, etc. And they always ask, what percentage of your portfolio should be allocated towards crypto? And the answer is always like, oh, 10%. Oh, you should diversify. I had a little ChatGPT experiment yesterday, and it also said, yeah, your crypto, blah, 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 should be a very small part of your portfolio because it's too risky. And that brought something interesting to my attention. People often confuse the earlier stability for, okay, let's actually back this up a little bit better. If I were to tell you Bitcoin is going to $150,000 because of the last 11-year history, most of the time when I do that, people tell me, no, that's not how it works. When I tell people XRP should probably go to $20, $25 in the next 2 years because of how it's been performing over the last almost decade, they often tell me no, that you can't necessarily take the past here and reflect it onto the future. But then when it comes to the stock market, people like to do that. What they like to do is look at the performance over the last couple of years, last 20 years, last 100 years, because that's basically how long it's been doing the same for, and say, just because it always recovers, it always will. And the reason I never slam people who tell me, Dusty, crypto doesn't have to be cyclical, the past does not have to reflect itself in the future, is because I understand that systems indeed do break. I've mentioned this sheet so ridiculous, it's not showing up perfectly, but this sheet here so ridiculously many times in my videos. And it basically showcases the world reserve currency per century, let's call it, because every 95 years or so it changes. And with that, it's mostly changing because the economy shifts for the most part, right? And it goes towards the strongest economy. Not exactly, but let's just put that as a baseline. Two things that are interesting. One is how crypto could, theoretically speaking, fulfill some sort of gap where in a near future world, no nation trusts each other anymore. They don't want any other currency to be that world reserve currency. And so it turns into something decentralized, not connected to one single party, like, for example, a Bitcoin, like Joe Rogan said. But he's not the best financial advisor in that department. But also a good question could be, what else? Is it going to be the Chinese yuan? Because America is not going to necessarily like that. So who exactly does, quote unquote, decide? Or better yet, does that mean that eventually this 100 and, let's call it 100 and a little bit year tenure of the US at the top of the top, is that at some point going to change? Well, if you're in it, you don't think it's going to change. Like, for example, with the UK here, like with France, like with the Netherlands, like with Spain, like with Portugal. Another fun part is that there's already a build-up period, like you can see before in red, where it's already actually building up, which in theory could, for example, be Bitcoin the last 10 years. Yet you don't fully know it until you're switching over to the next era. But again, following history since the 14 or 1300s, this is the way in which it's been going. And to refer back to our earlier point, it doesn't always have to remain doing well, this stock market. And as a hedge against the system that we've known for so long, people buy into these cryptocurrencies. And yes, you might say, oh, well, but they're riskier. What inherently is this risk? People often say, well, volatility in the general finance term is risk, or rather standard deviation, but let's just call that volatility for simplicity's sake here. Right? But if we only take the variance of the asset, aka volatility here, we're taking the difference in price and saying, okay, it is inherently riskier than other assets that move less without having a risk-free rate because, well, the risk-free rate only exists if the system stays the same. But inherently we're saying, no, everything has a risk because even though the system has worked for 100 and whatever years, it might not still continue to work. Good example, right? People use Sharpe ratio to measure whether or not they want to go for this portfolio, want to go for this investment. And they take the return of this asset minus the risk-free rate divided by the standard deviation to basically get an idea of how risky is this portfolio that I'm building here versus another one. But if you start thinking about it here, that ratio, if there's no risk-free rate being the interest rate generally speaking, because that's something you can take without really risking too much, right? Or you could perhaps say the return on bonds, something that's just, you're always going to get it and there's no real big downside risk. And the return of your portfolio or investment is the premium that you get on top of that, again, divided by the additional risk you're now getting. That's to see how good your portfolio is in terms of risk versus reward. But if there's no risk-free, and I'm going too far with this perhaps because I want you guys to really fully understand this. And maybe tomorrow I'll do a little bit of a simpler video, but I really want you guys to fully understand the basis of where I'm sometimes coming from with these sentences, these questions, these proposals, and these ideas as to why I'm so heavily invested into crypto. If there's no risk-free rate, we've only got ourselves the return of the portfolio divided by the standard deviation. And the point being here that following this ratio, for example, something that has almost no returns and almost no risk is not inherently better or worse than something that has crazy high returns and also a lot more risk, where again the volatility is the risk that we're talking about here. But why even care about volatility if everything could be way more volatile than we've ever experienced, depending on what the market's going to do next? And the market could go literally anywhere to TradFi space. And then if all of a sudden this equation turns a little bit wacky all of a sudden, unless you're shorting. Because like I earlier said, that risk-free rate then falls away. The return of our portfolio inherently could become nearly zero, yet the volatility could become significantly higher if we're just buying stocks and whatnot, if a major crash were to happen. And we all know that, we all realize that. And with crypto, I mean, the volatility is not really going to change. Right now it's a lot lower, but we all understand the ups and downs. And it's only the returns that could change, but it's only for the meantime though. Whereas with the stock market, I believe that could actually crash and have a very hard time to come up because again, another economy might take over. And I think crypto's in that period right now where the US has been for, I guess, the last century or so, where even though it's going to have its downfalls, it's going to pick itself back up again. So volatility is not too much of a risk, is just a meantime, a little stalling point, I'd say. Whereas with the stock market, I see the risk as real risk. Again, my thoughts on the matter, right? This is my stupid take on this because I usually think about inflation as a crucial metric. Crucial. It makes you realize that every single second you spend, your money is becoming worth less. And again, with crypto, you understand this proposal a lot more that is going to be volatile than with the actual US dollars that you're saving in. I ask you now, let's say you sell your crypto. What are you going to sell it for? Dollars? Indian rupee? Whatever the freak you're going to sell it for. That now valuation is only going to come down with no inherent return, only a negative return, let's call it like that. It's only going to be become worth less every single day, with again the potential of a very hard crash, a complete crash, if the market actually crashes and if something crazy happens, or people lose their trust in the government, like people have lost their trust in the banking system. So really, what is the most proper investment you can think of then? People say gold, people say houses, people say silver, people sometimes say it's things like your social media, things that don't necessarily have a tangible thing. Can't touch it, but people remember this, right? People have this in the back of their heads, and you've got a name for yourself. People in that aspect also say your reputation can never be bought and is therefore the most important thing. But I kind of like to step away from that and say, we got a situation, right? Everybody is distrusting their own government. What are we going to use to determine when somebody's rich or poor? Because a house, well, in bad times, so to speak, just because you own the house on paper doesn't mean you're going to keep occupying it. The government could always take it back, or somebody else could step in it and bam, it's now lost. Because without the paper, they're signifying you actually control that house. Nobody's, theoretically speaking, being stopped from taking your house. Unless you can defend yourself. Some people can. But then what exactly can be traded as well in an easy manner to make sure you're always good? And I sometimes refer back to that thinking, you know, if every other country stops trusting other countries with their currencies and stuff like that, really, crypto is that one solution. Anyway, this whole long story, I really wanted to get that to you guys to kind of see my thought process here and where I always come back to thinking, you know, crypto is just a very easy solution that ticks most of those boxes. And even though it might not be foolproof, it might not be perfect, it ticks off a lot of those boxes that my other investments can't have. And so if somebody throws up, hey, crypto should be a supplement to another portfolio, or you shouldn't have 100% crypto, I can always agree and saying, yeah, it might actually be wise to have some gold, have some silver, have potentially some stocks of companies that would do really well in bad times. For example, some war type of stocks, perhaps, you know, some energy type of stock, whatever, that type of departments. Perhaps have a little bit of currency in, or a little bit of money in all these different currencies in different countries, perhaps in different banks. A lot of my crypto friends say, no, I don't have any bank accounts. I like to make bank accounts. I like to make bank accounts in any country that I can. Why? Just in case, you know, you never know when you might need it. I don't think it's ever bad to have a bank account somewhere as long as you don't start relying on it. I've got money in some banks that I'm never planning to touch. It's just there for in case stuff hits the fan. I don't like banks. I know they can just take it away from me. I don't care. If worse comes to worse, they've taken it. Too bad. But perhaps worse comes to worse in another country, and that bank would have become very useful to me. You understand my drift? That's why I'm also never a fan of getting rid of every single bank account just for crypto, because in some countries as well, using only crypto is just not that easy quite yet, unless you've got a frick ton. You got $1 billion of crypto, you can do anything you want. If you've got $6,000 in crypto, Some things might just still be very difficult. In UAE, no, very easy. In some places like Thailand, very easy. Places like Netherlands, for example. Places like UK, oh, they're not gonna like you too much for that. Anyway, one thing that shall not be named on my channel is things I don't understand well enough. For example, this whole conflict. People have asked me in the comment section, how do you think it's going to change the crypto landscape? And all I can say is, these type of events make you realize what is precious to you. And for me, it makes you realize again that the things you hold most dear, I've had this multiple times throughout the last couple of years, because there's been many crazy events. The things you hold very dear to you could be taken at any one moment. And so not relying on one single thing, if we're talking about assets, for example, I think is crucial. And it just makes you realize that again. In terms of how it will affect prices, guys, that's almost impossible to say. We don't know how deep the manipulation in terms of stock and assets with all this lies. There are so many eyes on this, but we don't know how manipulated some parts of this are. At the end of the day, I'm a life maximalist, where I just want everybody that I can think of, I guess, to live a good life. But it's hard to shout things when you don't fully understand. And I'm gonna come out and say, with this situation, I don't understand it at all. So it's not my turn to speak. Moving on that tangent, because, let's continue on here for a little bit. People have been asking me as well, hey, bull market, when? What are you going to see if it comes back? Completely different angle here. Let me just quickly point out, you're going to see, this is kind of a good example, right? You're going to see a lot of freaking shit coins go and get crazy mentions, crazy amount of traction all of a sudden. And you're like, wait a minute, why is that happening? Why are these coins better than others? Why are people buying these garbage ass coins that nobody knows of, except for those insider communities? The only problem is, with social media becoming so saturated with garbage, a lot of these things are just bots. So if we're just talking about social mentions, I don't trust it. These all, I didn't take a full good look, but it could very well be that they're just pure trash and full-on spamming bots, making them the most noticeable coins on social media, even though they're garbage. But generally speaking, if coins all of a sudden in some specific niche start doing crazy again, plus 80% days, plus crazy numbers, it's time to start going a little bit degenerate mode again. I've also been trying to share a lot of different strategies for you guys to look into as to how to make profit. This is for my more advanced guys out there. A lot of people are arbitrage trading. Simply put, what it is you find an opportunity to buy an asset, buy a asset that's quite derivative and bank the difference, or you buy an asset in one place, sell it the other, and bank the difference. In this case here, somebody is doing it with ETH to staked ETH. He can buy the staked ETH at a slightly cheaper price than Ethereum, and he then redeems his staked ETH at a 1-to-1 ratio for ETH again. So every 1 ETH he does this, he banks to 0.0038 ETH, which is about 60 cents. The only problem is you've got yourself some Ethereum gas fees, and so he's doing it with about 1,400 Ethereum at a time, banking $500 each time. So again, negative side is he's doing it with millions upon millions of dollars and only banking $500 every single time. The good part is, well, if he continues this and does this once a day, perhaps multiple times a day, or he increases his stack, he might be able to make a couple $100,000 a year with this. And again, there are bots to do this. The only question again comes in with, how much is this worth in comparison to just holding the staked ETH? Because of course that's also about 4% a year that you're getting back, that by not staking it you're missing out on. We also saw recently that the Ethereum Foundation was selling ETH. A lot of people were afraid of a top signal because of that. And we've been monitoring a lot of different transactions. I like to do so for you guys to keep you up to date with whatever crazy things are happening. For example, whenever DWF Labs moves something, I'm on the case instantly to tell you guys about it because they like to manipulate the price. Anyway. Yeah, I could sit here talking about stuff for another 2 hours or so. But sometimes the problem with my video can be that I don't have too much of a good direction, and so I just start blabbering on and shouting because I have so much stuff I want to teach people. I know money making, or making money I should say, is not hard. Especially the more money you get, it starts to become easier and easier. And you start to see opportunities that most people are not getting, that you're only getting because you're either well connected or got money. And many wealthy people say this. They say, your first million is the hardest. Because in almost every way, shape, or form, getting to that amount of money is the hardest part, because there you've got to build your connections, build the way of doing business, understand how to set up companies, for example, or understand how to set up things. Afterwards is just expansion and doing things better. With crypto investments though, it's kind of different, because getting to your first milestone can sometimes be just a matter of, hey, you buy $60 worth of an altcoin, bam, $6 million the next week, you're just lucky. But perhaps you've done months of research and you noticed the good time, the right place. Then you're not lucky, it was analysis. With the one, you've gathered a skill set now. With the other, you've just gotten lucky, I suppose. Which brings up the point of why quick money very often leads to failures, is because you might have not gotten the appropriate steps to now preserve what I said at the start, your wealth from here on forward, or understand how to keep growing it more, how to keep scaling it, because you just basically got a lucky hit. And so now, instead of building it at, $1,000 and building your knowledge, building your connections. Now you've got to do that at this amount of money. And let's just say that most people lose a percentage of their whole money in the process of making money. Well, instead of now losing $200 or losing $500 that you would have, lost half of your money from 1,000, now you're losing $500,000 because you're still losing 50% in the process of making money. Yeah, you understand what I mean with that. I'm not sure what I'm going to title this video. It's mostly just a shout of dumb stuff that I want to share with you guys. Hopefully somebody did enjoy it though. And I'll see you guys again in another one.